This is Cece. Welcome to The Orbit. It is Thursday, October 26th. We have futures lower this morning. Meta is dragging the market down a little bit more. We had a pretty nasty sell-off in the Qs yesterday, powered by Google's disappointing earnings event, and that has carried through overnight. Meta did try to rally after hours on its earnings and then reversed, and this morning it is lower, not by a huge amount. It is actually inside the expected move, but it had a bad day going into this to begin with. So from an overall percentage standpoint, between Google, Meta, and several other tech stocks over the last couple of days, you've really dragged down Qs. The SPY that we're looking at is at around 415. We are through a fairly important support level that traders have had their eye on for quite some time, which was 4,200 in the SPX, and corresponding to about 420 in SPY. We are through that level, and that is something that I've written about in the Orbit and spoken about over the last several weeks. Is we came out of an expiration, a monthly expiration last Friday, and that changes that sort of gamma vol backdrop to the market. So a lot of those support and resistance levels that become very important in the week and a half leading up to a large expiration, all of a sudden that gamma changes after an expiration. And so you come in this week and those support levels aren't as supportive in a lot of cases. And we may have just seen that over the last couple of days, is that 4,200 level did not hold, and now we go a little lower. One level here that I think will be next that traders will be talking about is around in SPY around that 412 level, which is basically, if you go back on the chart right here, you get it somewhere in there, like 410, 412, see 415 right here. So we're getting really close to that level that traders are going to be pointing to, and I think it's helpful with all of these types of, looking at levels of support and resistance. Of course, go into the options chain, look for some open interest on certain levels, and it should be pretty indicative. We've got, let's just go to the puts real quick here. This is this week's expiry, but it'll give you a sense. You go down to the 410 level, the 413 level. There's some decent open interest, and you can just flick through the expiries and see that. And of course, SPX as well, which is coming soon to Options AI. Let's look after the close. Well, let's look at the 0DTE move right here. We've got about a 0.8%. This has been basically consistent. The SPY expected move is just under 1% every day. The Qs have been just over 1% every day. And then of course yesterday felt like the first big decline in one of the indices, QQQ, where there might have been a little bit more of a sense, not necessarily of panic, of course, because it was only down 2.5% or whatever, but of, that it was like picking up steam. The sell-off may be picking up steam. And, of course, for traders looking for those kinds of sentiment changes, you can't really, after a large correction or sell-off of this nature, not that this is large yet, but when you have this kind of significant pullback in the market that has seemed fairly orderly up until this point, most of the time some sustainable, viable reversals, they tend to first have to see that kind of acceleration of selling. And not necessarily panic, but you want to see people capitulate. So the Qs, the 0DTE is about, it's over 1%, so call it like 1.2%. After the open, that'll be about 0.9% or 0.8% an hour in, something like that. Amazon is after the close, and so let's check in on that setup real quick. This is the next big cap tech company to go this week, and we have a 7% expected move. Just going through the quick checklist, let's go and look down here of how this has moved the last four earnings. So an 8% move, a 4% move, an 8% move, and a 7% move. And today we've got a 7% move. So it's basically, it's been fairly consistent. So in April, it moved about half of that, but the other times it's been right around this kind of move. Let's just look at the chart where this expected move. Wow. So you've got a stock that is, having a rough month of it, or 2 months. And now with that sell-off yesterday, the setup is, the stock is quite low on the chart with a lot of wiggle room. If you look at this expected move right here, you kind of pick up this past high, which I'm hovering over right here. So that one sort of makes sense to the downside. If this stock were to go higher on earnings, let's see, the expected move is, like we're talking 130. Yeah, from a technical perspective, there's maybe not much there, but anyway, you can sort of see how this expected move, how it made its way into the options market. And it's essentially, this is roughly how much Amazon has been moving, 3 out of the 4 last earnings. So let's just look at let's look at a couple of trades. We'll go into the neutral. First thing we want to check is the Iron Condor. You get about a 50-50 risk reward for the $1 wide at the expected move. If you were to go outside and push this out a couple of strikes, this is probably the next, let's bring it in 1. So, that's somewhere around that 30 to 70 risk reward. You're picking up the, and this is basically, this is 15 deltas, at the short strikes probably. We can actually see, we don't have to guess. The are, so around 15. And let's just take a quick look at the options chain in Amazon and what we've got on the call side to the upside. Let's just look at those 130s real quick and see if they make a ton of sense, and they do. So you can see that 50,000 interest at the 130 line. You've got about almost 30,000 open interest on the calls on the 125 line, and the 120, let's look at the 120 put. The 120 put has 50,000. It's big down there. The 115 put line has a decent amount of open interest. So keep an eye on Amazon around those big, sort of round numbers of 5s and 0s at the end of these strikes. That is clearly where this month's open interest lies, and that could act as a bit of a support resistance magnet type thing within the gamma.